Hi, this is Bradley Barth with SC Media. I'm here in San Francisco at the RSA conference, and this interview will continue SC Media's series at looking at key cybersecurity issues across numerous industry sectors. In this case, our focus will be on the finance industry, and we'll be taking that from the perspective of a cyber insurance company. With me is my guest today. She is Payal Chakravarty, Head of Product Security and Risk at Coalition. Payal, how you doing? Nice to have you here.
Hey, Brad. Thank you for having me.
I'm glad you're here. I want to talk to you a little bit about getting your perspective from a cyber insurance point of view at how the financial industry is faring. Where are its key sources of risk right now? How can members of the financial services industry improve their security posture and work better with the cyber insurance industry? So for starters, since we're looking at different verticals, maybe you could give us a little bit of a sense about what distinguishes, differentiates the financial services sector from some of the other sectors from the perspective of an insurance company.
Sure, absolutely. We do insure financial services and financial companies, from sort of digital banks to trading platforms, crypto exchanges, all sorts of things there. But the key distinction, of course, as you know, the world has changed since the last couple of years. More business online. That means there's more credentials being shared online, more funds being transferred online, more transactions being initiated online. And that is the biggest exposure for financial industries, exposing us to fund transfer frauds and business email compromise, which is a huge percentage of claims that we see in a huge percentage of our claims that we see in the finance industry, per se.
There's such a push, of course, toward digital innovation and services in the finance industry. And some of that push and pressure comes perhaps from so many of the different e-payment and crypto options that are out there, and just amongst the competition of traditional banks in terms of what their services and offerings are. With any kind of new introduction of any kind of technology comes the potential for an elevation of risk, the possibility of introducing an exploit into your attack surface. Okay. Just talk a little bit about what you see as being some of the bigger sources of risk on the financial services side in terms of where the innovation is going these days.
Yeah, so in general in the industry, phishing is obviously a big risk. We know of various incidents in the industry that stem from phishing and voice phishing and SMS-based phishing and so forth, like Robinhood and others. But as financial the financial industry innovates, like any other industry, they're innovating in the cloud. So they're there's a lot of online assets that are appearing and disappearing. So it's important to know your attack surface. Very often we see exposures of basic web panels or things that are left unseen. So the assets and that are exposed to the internet are increasing. So that's a big attack surface problem. The other is data breaches, right? You're more people transacting online, more people sharing credentials. They don't know where they're getting hacked, right, or where they're getting compromised. So there's an increase on that element aspect as well. There's also more API-based transaction that's going on. So your APIs are exposed more to the internet. So you need to think about security holistically.
What right now amongst your clientele and prospective clientele that you meet with in the financial services industry, what areas of coverage do they seem to be most interested in, and why?
Yeah, absolutely. I think the FTF coverage is very important in the financial industry, as I said, or most of those companies. There is also we offer a wide range of coverage for ransomware, as well, extortion, you're recovering from a ransomware incident is an important factor. So coverage for digital asset recovery, business continuity recovery, reputation damage, all of that is important in this aspect.
Yes, and the FTF for the financial transfer fraud, that
Fund
goes
transfer fraud. Yeah.
sorry,
Yeah.
yes. That goes in hand in hand with business email compromise.
Yes. Yes.
And you did just mention ransomware, so let's talk about that a little bit. Give me a sense as to how involved Coalition is in the process of incident response when a client is affected in some way, or whether you're part of either the negotiation or just part of the overall response to things, and how do you work best with the victim client's own incident response teams as well, that basically are on that represent the client side, and how do you both interact together to hopefully achieve an optimal result?
Yeah, absolutely. So we have our own in-house claims and incident response team. If you would think about breaking it down into 3 steps during an incident, there is the investigation phase where we are doing forensics and analysis and root cause, and that's one phase of it. Then the remediation, how do you recover from that? Do you need to negotiate? So we help them negotiate, and if there's a ransomware event, we offer eradicate the problem, contain the problem, offer advice, all of that, right? And then finally, the communication, which includes, communication to different stakeholders, and as I said, negotiations with the negotiations that's needed for ransomware. So we offer all of that. But I'd like to add one thing. What's more important in ransomware and all of the things that we do is not what happens only when an incident occurs, which is, yes, we will cover you, we will give you the financial security, and we will be there to support you recover from an incident. But we want to also prevent that from happening, right? That's an important part. And we don't think of insurance or cyber insurance as somebody who's actually helping prevent, right? Mm-hmm. So I want to make that's where I think Coalition is very, very interesting, and that's why we see such a love from a lot of our customers. Is we are what we call active insurance. So we assess your risk continuously. So your risk changes. Today, I might insure you, and you fixed all your issues and your security posture looks great. I insure you. Tomorrow, something might come up and you added a new, like you said, you're innovating, you added a new application and exposed something to the internet and you got hacked, or you acquired a new company and, that domain is, it gets compromised. So the digital risk is continuously changing. And hence, insurance can't be a point-in-time mindset,
Sure.
That's where we are very interesting, where we come in and we are continuously assessing your risk. We're looking at your attack surface. We have software that looks at your entire attack surface. We look at data breaches. We look at hacker chatter. So we are monitoring the dark web and, Telegram and Pastebin. So looking for compromises, looking for victim lists and comparing that to our policyholder base, right? We have our own sensors and honeypots, right? So we take all of that data, combine that with the learnings from our incident response, from our claims, from our interactions with our customers, from the policyholder behavior, how they respond to incidents and our notifications to them, and we bring that into a risk assessment that's continuous, and mm-hmm. we are constantly monitoring them, we are constantly alerting them, we're constantly getting them to fix their issue, and hence being able to also solve the problem for them, solve their solve cyber risk in a way. You're improving their security posture, you're improving their risk profile. You're not just saying, okay, I'll pay it out if you have a claim. So that's where I think we are distinctly different.
For a financial services company that's looking to get insured, what, from your perspective, is the threshold, the minimum threshold for what makes them insurable or not insurable? And then as sort of a follow-up to that question would be, And then what can they do if they really want to demonstrate a commitment to cybersecurity? Then what would sort of take them to the next level of a strong cybersecurity posture, sort of the equivalent of, for my car insurance, I'm willing to plug in the little data recording device in my car that shows that I'm driving safely. So I get, a discount or something because, I'm showing extra commitment. So what's the minimum threshold? And then how can they take it a step above?
Yeah, great question, Brad. So the minimum threshold, so as I said, when we do our risk assessment, we give you, we tell you that these are all your problems. We are looking at your attack surface like a hacker would, and we see that these are your exploitable issues, right? So please go fix them. So that's your first step. We are detecting the issues and getting them to fix them. Second is we are asking for certain minimum bar of security, depending on the company size, depending on the number of transactions they're doing, or overall like revenue, number of employees, etc. We are asking you for MFA. You must have MFA in place. Things like EDR, backups, backup and restore. You have business continuity, recovery practices, maybe some network segmentation. We're not asking everything to be there for every company, but we assess the risk and we say, hey, we need to make sure you have these things in place so that you will be safe, right?
Yes.
And when they realize that, oh, I need this for insurability, they take it seriously, and they are giving us that data and letting us know that yes, we have it. Or if they don't, then we're like, no worries, you don't have it, but guess what? We can help you. We will offer you our support. We have support. We offer you partners and discounted partners, and go fix your problems and improve your secure posture and get insured. So that's your minimum bar during a risk assessment. Now to take it to the next level, like you said, I like the idea. I like what you said about a little sensor in a car that's monitoring you, and your premiums are changing based on your driver behavior. That is active insurance. So for example, in our case, we also have a similar sensor, which is our software that we offer for free. It's attack surface monitoring, cyber risk rating, third-party monitoring. So not just monitoring your own risk, but monitoring the risk of the vendors you rely on. We're offering that for free to our customers, and we are constantly checking what kind of alerts they're getting and fixing. So we are observing their behavior over time, and as they do that, their risk is increasing. So when you go to that dashboard of our product, you can see your risk history, like how many issues did you fix, how's your risk profile improved over time, and then when you come up for renewal, we know whether you have responded to the issues, where you're a good policy holder, and we will renew you really well. If not, we'll work with you on the fact that you need to improve.
Right.
Right.
I want to also ask you a little bit about the prospects of cyberwar and how that relates to cyber insurance. In some cases, cyber insurance policies, they can sometimes contain an exception clause for things like acts of war. And then that's something that obviously has to be negotiated out and determined. We're in a scenario right now where there are rising tensions with Russia, and there are malicious cyber actors associated with that nation state that, there is some concern that at some point they could perhaps attack our financial industry in some capacity and could maybe affect the banking system in some way. Mm-hmm. So from a cyber insurance company's perspective, how does that get negotiated and worked out in terms of whether something qualifies as specifically an act of war or a conventional cyber attack? And are those definitions, do they have to shift or be re-examined in any way right now because of the lingering and escalating tensions with Russia?
Yeah, it's a good question. So since the war started, we have been observing our data. We've been looking at all our root causes, who are the threat actors, whether it's Conti, Revel, what have you, right? We're looking at our ransomware trends, where they're originating from, a lot of things. We have not, from our data, noticed a significant difference in ransomware claims post-war versus pre-war. yes, there are certain things like the demand for ransomware has gone up by 20% in certain segments, but those are not directly correlated with the war. What we know as a, sort of in case of ransomware, we know there's new trends like double extortion and using affiliates, and sort of new existing gangs sort of disappearing and new gangs reappearing. So those trends continue, but we don't see any specific changes in our data. Hence, we haven't. I would say that we haven't really revamped or our coverages just because of war and say, oh, you're going to exclude you without evidence whether it's because of war or not. So we haven't done that yet. Now, in the future, what we do, I don't know. But as so far, there has been no significant impact one way or the other because of the war.
All right. Well, an interesting window into the financial industry from a cyber insurance perspective. Thank you for sharing some thoughts with us on that. My guest again, Payal Chakravarty, Head of Product Security and Risk at Coalition. I'm Bradley Barth with SC Media, and stay tuned. Still more to come from the RSA conference.
Thank you. Thank you, Brad.